Okay, that is Bajaj. Let's get in some market opinion now. Sandeep J. Shah is Associate Director of Motilal Oswal Private Wealth Management. He's joining in on the show. Sandeep, thanks very much. Good morning. Good to have you here. What's your view on the market in the near term from here, Sandeep?
Yeah, so I continue to hold my view that from a shorter term perspective, I mean, my target remains 94 to 9600. Shorter term because we are so close to it, and I think the bull market continues to climb a wall of worry. This has been a very slow, gradual bull market. In fact, to my mind, the bull market actually began in December 2011, and after 6 years, all we've done is actually doubled in intensity. We keep having numerous concerns which come along the way. We had demonetization, we had geopolitical tensions, we've had so many things, and the bull market continues to chug along. And so at this stage, I continue to maintain this target of 94 to 9600. And of course, once we get there, we'll review as to whether it's going to be a consolidation or whether the market actually prepares for the next leg upwards, or there's something else in store for us. And obviously, we'll be watching earnings very closely, as well as news flow, as well as global events as they transpire.
Okay, let's talk about banks for a quick bit. We get numbers from ICICI Bank. I mean, if you want to talk specifically about that name, great. Will we see a repeat of something like what Axis did? Should we expect a surprise? Because I mean, the stock hasn't really done anything while the market has moved up quite a bit. Your thoughts, Sandeep?
Well, in general, without getting stock specific, we have seen that some of the corporate banks, even though there has been a bit of surprise in terms of the way we have seen increase in the gross NPAs, but if you look at the overall total stressed assets, and I think that is what investors should focus on, and not just the net NPA or the gross NPA, or assets which have been recognized as NPAs, but assets which are considered to be stressed as well. And there are various schemes under that. If you look at that, even in the case of some of the earlier results that we have seen, we saw that even though there were net slippages, we hadn't seen, most of the slippages actually came from what was already there on the watch list. There haven't been significant increases outside of that, so therefore no nasty surprises. And that's something that I had actually said last time also that I was on your show, that last time as well, that if the overall quantum of increase to net stressed assets actually increased about a couple of quarters back, and that has actually shown the increase has been far more gradual. So the intensity of growth actually peaked out of actually a couple of quarters back, and so far whatever results we've seen doesn't seem to change that view. So I'm sure that most of the other banks which are likely to report results which focus a lot on corporate lending, there could be a few surprises here and there, but I think overall from the overall watch list plus the overall total stressed assets, I'm not expecting any major nasty surprises.
Right, Sandeep, so I mean, one can take that argument to PSU banks, because there is an argument there, right? I mean, one view says, very simply says, well, the government just isn't interested in the PSU bank space, so forget about it. I mean, nothing is going to happen. The other, the opposing view is that large NPLs are slowly getting resolved, a lot of money will be recovered. Where do you kind of place your bets? I mean, if at all, and can one do anything in size in that space? Because I mean, it is too tentative, isn't it?
Well, I have, consistent with what I just said, it has been my view that as far as the PSU banks are concerned, corporate banks, PSU banks obviously also fit into that space, that the bottom actually happened more than 2 quarters back. Okay. And we've already seen a fairly strong rally in some of the PSU banks already. However, I have continued to maintain that I would only continue to look at the top 3 perhaps largest PSU banks from an investment perspective. At the same point of time, I had also cautioned that I would like to actually watch this quarterly result to see in terms of whether there were any nasty surprises, especially for the PSU banks, given the fact that they'd already run up and they're not yet totally out of the woods, so to speak. So I think there could be buying opportunities post the quarterly result of some of the larger PSU banks as well. Given the fact that we're still having a gradual economic recovery, which to my mind started in Q2, where Q3 dampened it partially, and Q4 results so far seem to suggest that the effects of demonetization are already beginning to wear out. So if we believe that the economy is recovering, even if gradually, the fact that the NPA issue is slowly getting resolved, I don't think it's my case that the government is not interested in these banks. I think they are given the limited maneuverability that they have. They are trying to do their best. And of course, it's just that in India, things happen, things change, but very slowly. So the same thing is happening with PSU banks. If you recollect, we saw a lot of fairly aggressive, not aggressive, but a fairly dynamic private sector honchos actually joining as CEOs and so on. So there's a lot that's been happening there.
Okay, Sandeep. So invest, stick to top three, and be constructive on the space. Thanks very much. We are out of time. Appreciate you coming in as always, Sandeep Jaishah, with that perspective. All right, we'll slip into a very quick break. Next up, we've got a very interesting company we're going to be speaking with. I'm referring to Honda Motorcycles and Scooters.